Hello and welcome to Canada Finance, your one-stop shop to be out of focus in all of your intros. In this video, I will be talking about the impending stock crash and what you and I can do in order to help mitigate those losses and how we can easily profit from many of these falls. I will be presenting my points for and against a possible crash, as well as debunking some myths that have been brought up in comparison to previous crashes, such as the dot-com bubble, as well as the crash that we had most recently last year due to COVID-19. Of course, the stock market has hit a peak many weeks ago, with a slow bleed coming over the last month. It seems as though almost every single Wednesday the market takes a dip of at least 1 to 2% on the TSX. Much of the reasoning for a possible crash is due to the inflation and stimulus that has been pumped into the market, not only to individuals and retail investors. However, it is also the stimulus that has been keeping many of these companies alive through government grants and funding and bailouts of many different funds that were investing and keeping people's retirement savings safe. My belief is that the excess funding given to the retail investors that they have then since invested due to this incredible meme push that we've had, regardless of some people losing quite a bit of money, there's still more money as a whole into the stock market as there ever was before, with a lot more retail investors involved. CBC published a shocking statistic that more than 45% of the trades that have happened last month were due to retail investors. This seems like it would be something that would be cause for alarm, simply because more disorganized retail investors would cause more volatility within the stock market. Of course, a retail investor is going to have more frequent trades than a hedge fund that has 5, 10, 20 million or even billions of dollars to place into one single stock. Berkshire Hathaway with Warren Buffett has recently made $1.4 billion simply by putting a significant portion of their portfolio into 5 different Japanese companies. Technically, still 5 transactions spread across those 5 companies. This recent volatility seems to become a new normal, with retail investors quickly adopting strategies in order to improve their wealth short-term as well as long-term. Hedge funds have added pressure to prevent a future short squeeze with all of the losses that came from GameStop. The corrections we are having right now are relatively small, and they are consistent, and they are testing lines of support as the stock market as a whole. If you look at the charts from individual stock exchanges, the NASDAQ, the New York Stock Exchange, as well as the TSX, each of these markets as a whole do have lines of support and resistance. With the constant influx of retail investors creating a larger pool of unpredictable money in the market, of course there's going to be a significant amount of corrections. That is why we are seeing these weekly downs. If we first wanted to compare this to the dot-com bubble or the dot-com boom, the dot-com bubble was specifically focused on one sector. A majority of the companies caught up in the dot-com bubble did not have a realized value through their product or their website or anything that they were offering to their customers. The value was simply because of all of the people seeing .com in the ticker symbol, in the description. Anyone who understood that this company had anything to do with the internet invested and continued to invest over and over again, and that pushed it way up high. The problem with today's market is many of the companies that have been pushed up to what would be overvalued still have a lot of value in the market and can still consistently increase to meet the overvalued standpoint of their shares. This is why I would view the current state of affairs as a correction as opposed to a full-on crash. We are not having the same mass sell-offs due to incredible profits. We have gradual sustained growth by these companies that of course is not entirely sustainable in the years going forward, but it is not to say that the companies that are creating this boom do not have value that can be brought up to the market cap and the price of their current stock. We do not have the same major sell-off that has happened in the dot-com boom, where many of these dot-com companies went bankrupt or have not spent the money that was invested properly. However, most of these companies that are currently on their highs are doing a very good job of keeping their due diligence and public records capable of understanding the debts that they currently hold, as well as improving the operation of their company. especially with the meme sentiment of diamond hands and people holding with the cost sunk fallacy in order to make sure they get their monies back from all of their losses. It is difficult to say that these retail investors are simply going to get out of the stock market altogether simply because they have lost some money. Most of these investors will be trying to game the system or try to invest traditionally in order to make sure they get back what they had lost, so then they can earn the value of their stock in I told you so. So if you are currently holding a stock that has lost you more than 10%, 15, 20%, but you believe that it's going to go up 50, 100, 1,000%, I'll give you the I told you so bonus right now. Let's just pretend you can talk to me, you can leave it in the comments, and I'll make sure, wow, you bought it at what price? And it went up to, you made how much? Millions? Ah, I wish I was you. I'm so jealous you held on. Good luck. So now that you understand the feeling of possibly getting those gains, don't hold on to a stock if you have a significant loss. If you know that there's better opportunities out there and this stock is not going to go up, make sure you set yourself up for profits. Don't try to stick it to a hedge fund or a person that you've never met. Make sure you're getting yourself in the best possible situation. That being said, I'm just a person who does a lot of research, and you should do a lot of research as well to make sure that you are investing properly. So take this at its entertainment value or educational value and make sure you do your own due diligence to keep your money safe. In terms of the COVID crash, no one has a strong belief that the majority of the companies that they are currently investing in are going to go down. Most people have the feeling that they know that all of the stocks that they currently hold are going to be going up and they will be profiting. The unexpected events of COVID shifted that mentality significantly and caused the huge sell-off. There's no current great global risk that is causing that mentality to shift back again. The coronavirus situation is increasingly hopeful regardless of new lockdowns. The vaccines that are coming into place is one, putting a lot of focus on biomedical industries that have been popping off, as well as the entertainment industry for online sports and any form of streaming service has been doing extremely well during the pandemic and will continue to do so once people start going back to work doing their own daily lives. Many of the companies that were primarily brick and mortar businesses in physical locations have moved to online services that strengthens their brand and their goals in order to keep the retail customers in, and then there's almost going to be a nostalgia factor once we can get back to our normal daily lives. People would be spending more money than they normally would before the pandemic to reinvest in all of the good times that they have missed in the past year. So I believe this market is incredibly hopeful. However, these corrections are very fair and understandable given the huge pump that the market has had. These corrections will continue and a crash is entirely possible, but it is severely not likely with the huge amount of new investors involved in the market, as well as stimulus still being in place for much of the economy. Those massive sell-offs that pushed the stocks down temporarily was just that. It pushed the stock down due to selling. Not necessarily because the stock had lost a lot of value, it's just a lot of people predicted that these stocks would lose a lot more value than they actually did. Throughout the year, we've had a consistent gain back over and over again. That crash has fueled a lot of growth that a lot of these new investors are holding on to. Many people who started just after March could have invested in any company at all, and they're currently making gains. So using that knowledge, we have a lot of people who've made a significant amount of money who are just now starting to feel the effects of some corrections. The adage that everyone is a genius in a bull market is entirely true in some aspects. Many of these people who have invested have been able to say I told you so to many people, as they've just simply by investing in anything gotten gains and returns that they have so far not had very much to pay for. These corrections that we're having are opening ourselves up to a bear market, which essentially is a accumulation phase where many of these companies will drop 5 to 10% every single week, but continue to gain 4 to 10%, possibly 20 and 30, depending on what sector and what market is actually popping off. You can use reliable news sources, analysis, as well as the company documents in order to determine whether or not a stock that you're thinking about investing in will be going up recently, or if they have anything in the works that could bring their stock price up once the market is primed and ready for another leap upwards. So what can we do for the impending crash and fall? Well, if you have a significant amount of money in the stock market, you understand you may lose. An alternative investment is cryptocurrency. Cryptocurrency has been going up in value as general trust in the traditional market and centralized finance has slowly decreased. I have a full-length video on my investment strategies on cryptocurrency that I will link in a card down below or up here in the corner. However, my stance on crypto has changed slightly. With the recent correction last weekend that caused a lot of currencies to go down and then significantly bounce back, I am more bullish on Ethereum. This means that I will be purchasing multiple full coins of Ethereum within the coming weeks. I will be hoping to get it for under $2,300 Canadian. However, I will be paying attention and buying in anywhere between $2,300 and $2,400. Ethereum has the highest chance for retail and corporate adoption as the program is being used to create other currencies as well as more projects in order to benefit larger corporations. In a similar aspect, I am investing in EOS, which is another decentralized finance coin that you can find on Bitbuy. I use Bitbuy for all of my trades. You can find it in the link in the description and sign up using my code to support this channel. Though the platform is fairly innovative and there are many people who are working on decentralized finance projects within EOS, the hope is that more people will be funneling towards EOS as they realize the current limitations of Ethereum before it receives its many upgrades. EOS is currently trading under $7 Canadian, and I will be buying anytime it is under $6.60 Canadian. Bitcoin is still a safe investment if you're getting it under $64,000 Canadian. Of course, you don't have to buy an entire Bitcoin. You can buy very fractional percentages of Bitcoin just to catch the gains as you slowly grow your portfolio in crypto. At the most recent heights of Bitcoin, it reached nearly $68,000 Canadian, and it will continue to grow even farther than that, hitting $70,000 Canadian within the next months. However, it is extremely volatile, and you may need to pay attention to the markets in order to buy and sell and increase your profit overall. Though the leading strategy in crypto is to set and forget, where you buy and accumulate and just wait, as this volatility could have you selling right before it takes off 20%. It is still a very good idea to pay attention to these markets and make sure that you're getting the best value out of what you're buying. Make sure you are buying on lows. You don't necessarily need to sell, but you need to make sure you are keeping your investments as safe as possible. Don't buy on highs simply because of the hype, and make sure you're paying attention for crypto, not just because of the cryptocurrency itself, but also for crypto investments such as Hive, Hut 8 Mining, and Bitfarms, which I covered significantly in my first video ever on this channel. Thanks again for watching my videos! If you want more weird tips and tricks for the oddities of my life without getting audited, then you should follow me here and subscribe. I will be expanding not only into stock-based content, but side hustles and so on very shortly. So stay tuned for that. Thank you, and I'll see you next time.